We want to stick with tech, but get to another big tech giant here in the USO, and that's Apple. The stock hitting an all-time high today on the heels of a call from Morgan Stanley. It's our call of the day. Now, analyst Katie Huberty, she's out saying that raising her price target to a street high of $520 a share. Miles, it's interesting because when we think about Apple, the argument out there has been it's overvalued. A 70+% run this year puts that valuation into question. Maybe it's a little bit stretched, but Katie Huberty making the argument that, hey, maybe we shouldn't care about it, and the fundamentals do justify that rally.
Yeah, I mean, I think it's a hard one because obviously the stock price has run up so much that as an analyst, you are caught between saying, okay, how can we back into this making sense? And what sort of future upside can we justify? Now, I think the fact that Apple had been trading, at least on a free cash flow basis, and I think Amazon has kind of reset many analysts' views on whether PE or free cash flow, adjusted EBITDA, like free cash flow seems to be the measure that analysts and that investors are rewarding most, right? SaaS plays with their recurring revenue model give you visibility towards some kind of free cash flow future, not necessarily the kind of EBITDA world that maybe was predominating 20, 30 years ago. But leaving that aside, I mean, I think why Apple would trade to a discount is a fair question. And this note is saying it shouldn't and it won't. And so therefore, we think it's going to be a $520 stock at least. And I think that, again, it's sort of hard at this point to really look at Apple and figure out why you would be more bearish than its peers on the company's prospects. But of course, the last time the company, traded at this kind of a multiple, things were not so certain for where Apple was headed. This was in the pre-iPhone era when it was, pre-financial crisis. And so lots of things were trading at higher multiples than they later did over the next 8 to 10 years. But again, I think that it's so difficult for analysts, not only of Apple, but of all these high-flying tech companies to, do the chicken egg exercise. Do I feel good about Apple's valuation? Am I going to be concerned, as Huberty outlines, the concerns over the App Store regulation, whether this fight with Epic is really going to be the kind of thing that changes Apple's trajectory? Or do you just say, the stock goes up every day and all clients want to know is how much higher it's going to go, so I'm just going to put a big price target on it?
I think they might actually be late on this one. I mean, they have a 520 price target and the stock is at it closed at 503 around there. So Apple only has to rise by 3.3% and it's going to hit their 12-month price target. I mean, it could do that in one day. Just saying.
Maybe it will.
Yeah,
I already said my piece, Rick.
I was going to say, I mean, there is a case to be made about a bit of frothiness leading up to the stock split. So you put that aside, but it does seem like there's been this fundamental shift in how Apple is being rated as a stock. So it's sort of catching up to the narrative that Apple has been pushing for a while, which is we're not a hardware company, we're a services company. We've got this ecosystem and essentially it's going to sort of feed itself. And that's kind of the argument that's made in this note as well, which is that we no longer look at the stock specifically based on the hardware and the cycle. It is about the services ecosystem. And to that point, there's a lot of stickiness, not just within their apps, but especially on the health tech side of things too. And if those grow at the same rate they have been, or even accelerate, there is a case to be made for the stock price you're pointing to.
You know what? Morgan Stanley put out another interesting thing today. They did a survey of their summer interns and just asked them their outlook on things and the brands they like and stuff. And I think it was almost 90% of the summer interns at Morgan Stanley said they have an iPhone and they're in the Apple ecosystem. And that made me realize that Apple products are must-have devices for all of the privileged people in the world. Just think about that ecosystem and getting people inside the walled garden. If people are committing to this product when they're 18 or 20 or 22, you've got them for as long as that product is relevant. So that's a fairly awesome base of customers.
Can I just point out that I'm looking at where I'm sitting right now? I've got 5 devices from Apple. I've got my
What are they?
I've got my iPad, I've got my watch, and then I've got 2 iPhones. So there you go. I don't know if
What
I'm in
about
the
AirPods?
privileged bunch that you mentioned, Rick, but
You have AirPods?
I don't have AirPods. So
Oh,
there you
see?
go. There's that
There's
one.
more. There's still more for you. There's still more you can buy.
Well, I've got the AirPods. I've got, Akiko, right when you said that, I started counting the devices in front of me. I also have 5. So that really points to the strength and the importance and really what gives Apple the advantage, the ecosystem that we have been talking about. But again, shares closing at a high today at 503.43 a share. Morgan Stanley's Katie Huberty thinks it's going all the way to 520.